Welcome to the Voice of Insurance. I'm Mark Gagan. This week saw the launch of the World Economic Forum's annual Global Risks Report at a big set-piece media event in London. The World Economic Forum is the organisation that brings together global political leaders, company CEOs, think tanks, non-governmental organisations and of course the media for a major gathering in the ski resort of Davos in Switzerland at the end of January every year. The risk report is usually released the week ahead of the summit. MMC has been one of the risk report's long-standing sponsors, and I was lucky enough to catch up with John Drzik, who's chairman of Marsh & McLennan Insights, for a chat. As I said, it was a big media event full of TV and international press, but I managed to grab 10 minutes with John in the room after the event. I started by asking John for a really brief explanation of Marsh & McLennan Insights.
Sure. So Marsh & McLennan Insights is a research center within Marsh & McLennan Companies, which focuses on major issues connected to our businesses, which focus on risk, strategy, and people. And so a big focus for us is around the major risks facing the world. And so the Global Risk Report is one of the partners that we have with Marsh & McLennan Insights, or is one of the initiatives we have where we partner with the World Economic Forum, and then we have other research partners on other topics and publish material under the Marsh & McLennan Insights name.
And so, turning to the Global Risk Report today, what were the key takeaways? If someone wasn't here today, what would you and you were having to explain to them? What were the key risks that the surveys uncovered this year, and what were different about this year than other years? What would you tell them?
Sure. So I would say if you look at the short-term risks that were highlighted in the report, they were in the geopolitical sphere, so expectations for greater economic confrontations between major countries, as well as greater domestic political polarization, and so concerns mainly in that sphere. In the longer-term segment, though, a striking aspect of this year's report is that all of the top 5 risks were in the environment sphere, so ranging from extreme weather to adaptation to climate change to biodiversity loss. And really, that was quite striking. I've been doing the report for 15 years, and this is really the first time you've seen all of the long-term risks in the same category.
So, as the global insurance broker, surely more risk is a good thing. Is it? Is that how you see it?
Well, risk is our business. So, we advise our clients on risk. We transfer and broker risk. So I think there is opportunity for us in that. Obviously, we're working with our clients to help them mitigate their risk. So it's, but yes, it does create demand for advice and solutions.
So, I mean, the rising star, if that's probably not the right way of describing it, of this report as opposed to other reports, has been climate risk and environmental risk in general. So, what are the prime insurance solutions that you can be bringing to bear to help mitigate those risks?
Yeah, well, I think there's insurance, and then there is some that I would say are more advisory solutions that we can bring. But I think, insurance, the principal line of insurance that deals with climate-related risks is obviously in property insurance. And so there's different, looking at extreme weather and how that could basically have an impact in property markets, and both near term and longer term does create a significant, one of the most significant insurance markets that's out there. And I think it's changing. It's a moving target to price this risk now because of the changes in climate. So a real challenge for our clients to find the right type of capacity. I think there's also liability risks that are probably the new area in climate, where companies could potentially be exposed to liability claims for their action or inaction on climate. And this is relatively new, but it's a growing concern, that you could have claims on D&O policies and other types of, liability areas that could relate to climate.
You mentioned also about new insurance instruments that you might be bringing to bear. Can you give us a bit more detail about some of those to help cover some of these environmental risks?
Sure. Well, I mean, one of the areas that I think is very interesting is around help working with the public sector to transfer some of the risks related to natural disasters into the private sector to enable more rapid response post-disaster event for communities. And so there are a number of different vehicles that have been established. I mean, there's one called CDRIF in Asia, which is more disaster risk financing vehicle where it's a public-private sector collaboration. There's also other more straight reinsurance transfers from government flood insurance vehicles into the reinsurance markets. But I think this should be an area of growth because it provides more immediate liquidity in response to an event, and therefore there's opportunity for innovation and new types of vehicles in this area.
Something you touched upon today was the regulatory response. This is for financial regulators looking increasingly at financial institutions and other companies' exposure to climate risk and the way that they're dealing with it on both sides, on the risk and also on the investment side of the balance sheet. You also mentioned about BlackRock now joining in with the kind of greening of investment. And the insurance industry, for example, has taken a stand recently on coal and other carbon-related industries. I mean, how long do you think, and as a global insurance broker, how long do you think if you got before risks like coal are uninsurable, or also what are you going to do about that with coal-related or carbon-heavy clients?
Yeah, well, coming back to just comment on your Bank of England point, I mean, I think that is a step toward requiring greater disclosure from the financial sector around their climate risks and the modeling of some of the risks in the non-financial corporate sector. I think we'll see more and more disclosure requirements and companies doing it on a voluntary basis.
And it's a kind of nudge, isn't it? And you also mentioned rating agencies, so it's the Standard & Poor's and AM Best and
They're
others.
They're starting to use climate in their risk assessments for companies. So as you know that you're going to be evaluated by regulators and rating agencies, and you're going to have to disclose certain information to them, you're going to want to get ahead of that and proactively do that risk modeling and sort of know what it's all going to say. And so you can start to manage your business more proactively in a direction that's going to be positive for those constituents.
Is the corollary of that some of these carbon-heavy industries are actually going to become uninsurable?
I think you could find I don't know if they'll be strictly uninsurable, but more challenges in finding capacity because you have had insurers that have withdrawn. I think you could also find it in financing markets because if you think about the Bank of England and the extension into banks elsewhere, that they're looking at credit portfolios and looking at the risk that banks have from lending to entities that could face challenges under certain climate change scenarios. So it might be harder and harder for companies in certain industries to get credit as well as insurance. And so I think the pressure that's coming from the regulatory community could create greater and greater challenges in those segments.
Obviously environmental risks really took center stage today, but a risk that certainly didn't go away and it still appeared in the top rankings was cyber risk. Can you give us an update on the developments in increasing capacity for cyber risk and what you've been able to do with that?
Sure. Well, cyber is still the number one risk as perceived by the business leaders in advanced economies. So although climate was the centerpiece of this report, when you look at it from a broader societal basis in the business community, cyber and its downstream impact is still the number one concern. And so in terms of the development of the risk, I mean, it's one where it's a very dynamic risk from an insurance market perspective. There's more capacity out there now to that's being built for individual companies. There probably still isn't enough for some companies in terms of what they'd like to have, but the market continues to grow. It's growing particularly outside the U.S., where it's a relatively new market in some countries, but also in its more developed countries, it's growing not only the third-party risk, which is more the kind of data breach-oriented cyber, but also in the first-party kind of property damage, business interruption, and other types of risks that stem from direct attacks on company property and infrastructure. So I think you're seeing the market. It's a very dynamic market. It's one of the fastest-growing markets in insurance, and one that I think we expect will continue to grow.
To listeners who are just thinking about downloading this report, how should they read it? Is it fair? I mean, cynics might say that it's it's a report that tells you about what people were worried about last year. Is that fair, or should you use some of that? How should they go about reading and understanding the insights that they can get from this report?
I think the report. One of the things we've tried to do is try to divide the short-term and long-term more explicitly, so that we're anticipating that the survey respondents, we're asking them to look at what they think is the risk on a 10-year horizon. We may see what's happening on a 3 to 5 rather than a 10, but I don't think it's really looking at just in the rearview mirror, because I think when people think about climate, it's which is the centerpiece of this year's report, is really thinking. I think it is a forward-looking concern that this risk could accelerate, and that it's a situation that's bad, but it's getting worse, and all indicators are pointing to it getting worse as we go forward, and that people are projecting out beyond the immediate environment and saying the reason this risk is the top risk and concern on a 10-year horizon is because in 10 years we could be in a very different and very challenging spot if we don't start to act now.
And what would be a call to action to your clients, coming out of this report? What would you highlight to them most? What do they really need to be doing?
I think let's focus on climate, then I'll comment on some other risks. But in climate, I think it's really understanding the risk as it faces their company. I mean, it does hit different companies differently, and I think their tools are available to quantify it. And in part, they've been developed in response to some of the growing disclosure requirements, but I think there are advanced modeling tools, better data, better projections of climate that can be used to get to a number. And I think most companies will be surprised by the exposure they have to climate risk if they actually go through that analysis. And then the better understanding and measurement of the risk, I think, can lead to better management. So I'd say as a first step, the risk quantification, and then after that, kind of looking at risk plans and are they sufficient, and then looking at where there may be growth opportunities for the company.
Thank you very much for your time today. Thank you very much.
Okay, no, thank you. Enjoyed it.
The Voice of Insurance is produced by me, Mark Gagan. Music was written by Anna Gagan and produced by Carlos Gagan. Check out more podcasts and written comment pieces at www.thevoiceofinsurance.com. Thanks for listening.